Hi, everyone. My name is Tim McCutcheon, Strategic Advisor to Wealth Minerals. This is the second in a series of little chats that we do to keep our shareholders abreast of what's going on with the company and the broader trends, and just have a chance to speak with you in this sort of more personal format than press release or at a conference. Clearly, right now, from a top-down point of view, the lithium market is experiencing some difficulties. If you remember, the lithium market is a pretty narrow market. It's not very big. It's certainly nowhere near the size of copper or some of the more well-known metal commodities. And what that means, though, is that because it is smaller and because there are fewer players involved in the market, you're going to have higher volatility because it does take a lot of money going in or coming out to move the price around. The best example of this is what happened in 2018, where the lithium market just absolutely collapsed in the course of less than 6 months. And for those of you who have been involved in the market since that time, you obviously remember that as being a very dark time for companies like Wealth Minerals and other lithium developers in the space. Things are a little different now than then. The market, even though it is small, is certainly broader than it was back then, meaning there are more people involved in buying and selling. It's not just a mere handful of people who are involved in the market. It's now dozens and dozens of traders and buyers and sellers and whatnot that are involved. And there are more consumers of lithium as well, certainly more consumers of lithium on the margins. So although things come off quite a bit from the $80,000 a ton LCE prices that we saw, we're still significantly above the price levels that we experienced back in 2018. And of course, as anyone will tell you, the market demand for lithium really hasn't been dented. And I think the key thing to sort of convey for everyone involved in the sector is that the projected supply-demand deficit, which of course is going to change over time as new information comes in, and the uptake of EV cars and the uptakes of people production and consuming and whatever, it's still, even in sort of reasonable worst case scenarios, there still is a significant gap in terms of the available supply of lithium in the next 3 to 5 years. That's still there. It's really not going anywhere. And in fact, what it does mean, the current sort of slide in lithium prices, it means that there's less money available to fill that gap. And so we're probably going to see a repeat of what we saw from 2018 to 2021, which is prices come down, investment is withdrawn from the sector, projects don't get advanced, and then all of a sudden there's a time where people realize this, and then you get this flood of money coming into the sector because they realize that this gap is still there, it hasn't gone away, and then you get basically volatility on the other side where things get rallied up to very high levels. So unfortunately, we're still in this sort of wave cycle of euphorias and depressions, but the lows are getting higher than they were in the past, which basically suggests to me that the long-term trend is very much in place, that lithium is very much in demand, and that now, for those of you who have a longer time horizon to your investments, now is a pretty good time to get into the lithium sector. Regarding wealth specifically, we came out with our PEA results, preliminary economic assessment results of the Cusco Project, which is the project that we've named in the Ollagüe Salar. About $1.6 billion NPV at a discount of 10, which is a very high discount rate, which means that there's a lot of room for upside by discounting it that much, and an IRR of 33%, and that's pre-tax. Post-tax, that drops down to about $1.2 billion and an IRR of 28%. In any case, any natural resource project that has an IRR well north of 20% is usually considered very attractive by financial institutions that want to finance it. And the Cusco Project has a lot of sort of numbers out there that I think make it particularly attractive. First and foremost being a less than $6,000 a ton cash cost for producing LCE. Right now we're trading at twice that in the market in terms of the price of LCE on the open market. It was all the way up to $80,000 a ton. We think that the long-term steady state price will probably even out at around $21,000, $22,000 a ton. So at $21,000, $22,000 a ton was a $6,000 a ton cost. There's lots of margin there to make everyone very happy in terms of the financial performance of Kuska. And the capex cost, projected capex cost, is just shy of $750 million, which obviously is a lot, but it is well within the range of what these projects, are expected to cost, and well within the range of the capex expectations of strategic partners that are looking at this space, whether to buy out Wealth Minerals or to partner up with us or to somehow get involved with the project. So all of the parameters of the PEA fit with what you would want to see in terms of a project having enough financial robustness to make someone want to be involved, enough margin that there's plenty of things that can compensate for unpredictable issues that happen in any project. You got lots of margin, and the capex hurdle, although it's up there, it's not unreasonably high. As you know, I'm sure people who follow the lithium space, follow other spaces. When you see these natural resource projects that have $2 billion capex or above, it just gets a little silly. I mean, you need to be a country to be able to afford these kind of things. Whereas 750 is a lot, but with a combination of debt and equity and a strategic partner, it is certainly doable. So the footprint of Ollagüe, about 20,000 tons of LCE a year, ramping up from 0 to 10 and then to 20 over a space of about 3 years. 20,000 tons of LCE a year would make it comparable in terms of production footprint to some of the more well-known names that have been bought out recently, like Millennial Lithium, Neo Lithium, and some of the other folks who are involved in Argentina, where they've been able to develop a little faster. So anyway, Kuska very much fits sort of this valuation, production footprint sort of mode where there are plenty of comparables where you can see that a project like Kuska is valuable. People do want it, and it's worth a lot more than our current $80 million market cap. So that's one thing that we'll put aside. And then talking about, we just mentioned Argentina, and of course, whenever you mention Argentina, you want to mention Chile in terms of business environment and everything else. As we said before, obviously everyone at Wealth would like Chile to be moving faster in terms of as a jurisdiction in which we do business. However, I will remind everyone that we have, at the end of last year, you really had some pretty significant benchmark events. So you have Codelco buying out LPI out of Australia to consolidate the Maricunga Solar. It was $200 something plus million to buy out the Maricunga Solar, to buy out LPI. So a state company transacting in the private marketplace to consolidate land, and they're not doing it for a whim. It's way too much money to just sort of pretend to do it with nothing better to do. This is real money, and this means that there's real financial decisions behind this, and obviously the management at Codelco thinks it's worth spending this money because they're going to make a return on it. Then you have around $100 million acquisition by Eramet, big French company, of a private solar in Chile as well. Ironically, one that we were scheduled to buy in 2018. We just couldn't find the financing for the acquisition. So you have two M&A transactions in Chile at the end of last year when we had gone years without any transactions. And then we finally had the government and Codelco, and SQM sort out their differences in the Atacama Solar with an agreement that allowed sort of the whole thing to move forward. When President Boric came out with this new policy back in April of last year, in that policy he spoke about basically the state having a much more active role in the production of lithium in the Atacama Solar. There were a lot of questions as to what that would look like. Well, we now know the answer. That deal came out where Codelco and SQM will be operating jointly, and then slowly Codelco will be taking over those operations in the Atacama Solar. But that uncertainty is now removed. And again, this is something that would have been unheard of a year ago or 2 years ago in terms of Chile as a jurisdiction and making concrete moves in the lithium space to make it a more predictable playground, to make it a more investor-friendly playing ground. So we're going in the right direction, is ultimately what I'm trying to say. As far as this year's goes, we are looking to firm up a strategic relationship. There's been some news articles about us working with BASF, a big German multinational company involved with chemicals. And BASF, we're still working with them to basically go from basically an intent to a concrete executable partnership. But again, this just shows that what we've been saying all along is that wealth minerals in our Atacama project is interesting to very large multi-billion-dollar companies who want to consume lithium and are coming to the realization that what they want means that they actually have to do something about it because it's not going to fall in their lap. They need to be proactive. So that's happening. And what we also have, of course, is, again, the day-to-day drudgery, if you will, but it's absolutely required of just making sure that all stakeholders in the projects are feeling comfortable, that we have a good relationship, whether it be a local indigenous group, whether it be local government, whether it be federal government in Chile, so that everyone knows what we're doing, that there are no sort of mishaps and miscommunications, so we can move forward. And as we all know on this call, we follow Kuska. The Kuska template has worked, and that template is being applied to Atacama as well. So that's really it for today. To recap, events in Chile indicate that the country is moving forward to a more predictable, more investor-friendly environment when it comes to developing lithium projects. So that's number one. Number two, in terms of wealth minerals specifically, we have the PEA out. It's a very concrete, objective metric that people can value the project and basically compare us to other projects, compare the valuation of wealth minerals to other companies that have projects that were similar, and obviously realize that wealth is very cheap right now relative to its peer group. And then number three, that the lithium market is depressed right now, and that's certainly affecting all companies that are involved in the lithium space. However, this seems to follow a pattern in the lithium sector in general, where we have high highs and low lows, but the general trend seems to be in a positive direction because lithium consumption isn't going anywhere. And the deficit of lithium supply is still very much in place. In fact, it's probably getting exacerbated by this current downturn, which means that the long term, I think the lithium market is going to be very buoyant, and there's going to be a lot of room for a company like Wealth Minerals to make a lot of money. So thank you for your time, and we'll have another third one following up when the time is right to do so. Thank you. Take care.